This morning, and this is Monday morning, I got an alert that both Supermicro and Taiwan Semiconductor were approaching my target price. I have on my cheat sheet, which is on my website, the target price I want to buy all 37 stocks that I track in the bus 12 and the bus 13. Let me take you to the cheat sheet and I'll show you exactly what I was talking about. Here we are, and you can see this is Taiwan Semiconductor, and it's selling right now at a current price of 127.41, and I have a target price of 127.10 on it. So it's 31 cents off of my target price. And here you see Taiwan Semiconductor. It's at $6.99, and I have a target price of $6.91. So it's $8.50 off. Well, since this alert came, it has come down to $6.91, and I bought and filled part of my goal to hold in Taiwan Semiconductor. Why did I buy that, and why haven't I moved on Taiwan Semiconductor? Well, let me show you why. If you look at Taiwan Semiconductor, I have done an analysis, and I'll show you that. And it tells me that Taiwan Semiconductor's top price for this time next year is $176. The Wall Street analysts say it's $149. The tech shows me it's $110, and the fair value says it's $216. So if I do buy it at its current price, I'm going to make 14% on it. Well, No, not interested. If I buy it at my target price, I'm going to make 14.6. Not interested. Let's come down here to Taiwan, or to Supermicro. If I buy it at my $6.91, which I did, I'm going to make 30% on it. If I buy it at what it's selling for right now, I'll make 28. So I went ahead and bought it, and that's how this works. Now, the other thing I want you to look at while we're here is the potential of some stocks is much, much greater. Look at NVIDIA. If I get it at my target price of $7.12, I'm going to make 62% on it. Well, how do I know that I'm going to make 62% on it? Well, let me show you. This is Supermicro. This is my analysis of Supermicro. And what I do is, again, now it's telling me that the price is $7.03. So I've made some money on my $6.91. But nonetheless, what I do is I track their earnings per share, and then I track their price. And I compare their earnings per share growth to their price growth. And what I come across here and say, since 2009, their earnings per share have grown at an average of 37%, while their price, the stock price, has grown by 59%. So what that's telling me is for every 37% that Supermicro grows in earnings per share, they're going to get a 59% increase in price. And they're projecting next year that they're going to grow their earnings per share by 8.3%, and then in 2026 by 18.6. So that basically is saying that the price is going to be this time next year 58% higher than it is right now. So that equates to $790. Then when it gets that 19 or 18.6%, I'll get a 29%, and my price will go to $1,023. So for the 2 years, I will have a 46% growth based on this analysis. And that's how I go through it with every stock that I look at. The other thing then that I look at is, and I need to fortify my beliefs. This is revenue. What I want to see is a company that's revenue is consistently growing. Because think of it this way. Your revenue is the amount of money that you got coming in. If you're growing your revenue by 35%, and inflation is 5%, well, effectively, you're growing your business by 30%. On the other hand, if you're growing your revenue by 2.6%, which is, if you'll watch my Monday morning video, is what Procter & Gamble is growing at. Well, you're not keeping up with inflation. And if that continues, you're on a death march. you're basically going to go broke, because if you can't keep your revenues above inflation, you're going to be foreclosed on. That's what would happen in your house. If you can't keep up with inflation, you can't pay your bills. So you got to downsize. You got to get your children out of the house. You've got to cut your expenses because you're on a death walk. And when you retire and you have no income other than Social Security, you're on a death walk. Well, that works in the human race because we are all on a death walk. And it will happen. But in business, it's a sign that the company is going down. Could it be that Procter & Gamble is going down? Yeah. Sears Roebuck did. Kodak did. They're not growing their revenue, so they'll go down. I look at then Supermacro. They're growing their revenue 6%, 46%, 36%, 105%. Then they're projecting a 41%, and 26. It's a 7.2. I suspect it might be higher than that, but that's their current projections. Then the other thing I look at, particularly in these growth stocks, is what are they spending on research and development? This would be comparable to you as an employee or as a business. What are you spending on your education? What are you spending to make yourself smarter? And if you're not keeping up, then you're on a death walk. They are averaging 17%. Let's look at NVIDIA. This is NVIDIA. They're averaging 24%. They're going to have a 172% growth in their stock. This is an even bigger win in the future. But this is what I do on my analysis. And this is what I make available to each and every one of my tribe members. Just like right now, when I bought my shares of Supermicro, I put out an alert to everyone in my village, my tribe, that I just bought. I will buy more if the price comes down even further. I will build a position in Supermicro. Why is that? Let me show you exactly why. This is Supermicro's chart on TradingViews. And what I've done is I've tracked their growth over the years and said, when they go up like this, what is the correction that normally occurs? And there it is. It came back to me and said, based on this growth and this growth, they're going to come down to somewhere below $747. Right now, they're at $700. I then looked and said, look, every time they cross their 50-day moving average, they have a drop. Well, there it is. Okay, and how far will it come? Well, that's the 200-day moving average. I don't think it'll come to there, but it's quite logical. My next purchase could be around $621. This is what I teach my people. Do not buy because Jim Cramer says it's in my trust and it's a strong stock. No, Jim, it's not. It's not keeping its revenues up with inflation. It's on a death walk. Think about it. What is it they sell? They sell all the things that clean up your house. They sell the toilet bowl cleaner. They sell your soaps, all this sort of thing. They're being priced out of the market. Okay? People are buying private label rather than. That's why their revenues are not keeping up with inflation. They're a dying company. And if you can discover this on a regular basis just by coming to my website and putting in a ticker symbol and saying, what about John Deere? Is it a growing company? Are they keeping up with inflation? Are their revenues going up? Are they spending money on research and development? If you could do that, if you had access to all that data, would you be a better investor? Could you make better investment decisions? I think you can. And my goal is to give you that advantage. Why? How am I giving you that? Because I know where to find the data, and I know how to analyze it, and I know how to present it. And for $60 a month, you can have access to it. Now, if you care to just keep listening to Jim Cramer or whatever talking head you listen to on YouTube, go ahead. But if you want to compete with Goldman Sachs, if you want to compete with the hedge funds who are just kicking your ass right now. They're bringing this down, and you have no idea where they're bringing it to. I just showed you. If you want that kind of information, you know where to get it now, and you know what the ticket is. Now, you could subscribe to all the data sources that I subscribe to and spend $2,000 a month getting this, and then you could build a $30,000 website, and then you could hire $10,000 worth of employees a month to do this sort of thing, or get on the bus.